In this video, we are going to be analyzing HOLO. This is for MicroCloud Hologram. So this stock reminds me a bit of a Mullen, which was MULN, and it's basically just look how these stocks are both trading. Mullen straight down, just overall the big downtrend is down. You're getting these pops along the way, which again could have provided great trading opportunities, but overall the overall move is down. Again, if we look at MicroCloud Hologram, what's it doing? The exact same thing, kind of just overall very obvious big down move, but again you are getting these big pops in between. There's two ways you can trade stocks like this, and it just depends on if you only like to trade long or you only like to trade short, or maybe you like to trade a bit of both. So ones like this, you can kind of just hold when they kind of come down into these low areas. So like right now we're sitting at $23. If this is something you did want to get long bias on and you want to look for, 1,000% movers, this stock definitely has the possibility to do that. That's not personally how I trade. So just so you know, this is not how I would ever be trading it, because the reason I don't like trading like this is, again, firstly, there's no guarantee you're going to get this massive move. I guess that's like anything in trading though. But it's also, you don't know how long it's going to take. So you might buy in now and it might take 3-4 months to do that, and then that capital is just tied up in that trade. So not something I personally look to do, but considering how this stock moves, there is probably a good chance that if you buy kind of near these lows, you try and buy at 20 cents. There's a good chance you can pop to a few dollars at least on the stock like this. And again, you can kind of just look to get out quick with those profits and just run. Again, not personally how I trade, so I won't cover that too much. The other way I would look to trade this stock is really when you get these big pops like these are ones you just look to short. Again, a bit like a Mullen. If you get these big pops, you just look to short them. Now, how do we know where to short these moves? You use these deviations. Again, if you watch any of the analysis videos we go through, we talk about these deviations time and time again. They give you high probability reversals areas, especially if you look at these green and red ones. These green lines, these are third deviations. These red lines, these are fourth deviations. At the third deviation alone, 99.7% of data should trade below that level. So if we know that, that is a high probability reversal area. And obviously the fourth is going to be even stronger. That literally caught that to the penny top move before falling massively. And again, that essentially predicted a 97% drop. So how we would use these? Again, same thing. If price did pop, that's where we look to short. And then where are these currently at? So if we zoom out. So first deviation's at 560, $12.30 is the second deviation. $19 is where I would start to look to short something like this, and that's going to be our third deviation. And then at $25, you have the fourth. So really the high probability shorts would be $19 and above, because again, that's going to be your third deviation to fourth deviation. So that's where we would look to short this stock. Now, trading it just on a normal thing or swim account may be hard, just because, again, we're looking at this, there is no options to trade, and it is hard to borrow. So this is normally just something I'll stay away from, because it's just going to be annoying to trade. Now, there is ways you can trade it. That would be either through CFDs, which, again, if you're only from the US, you may struggle to get access to. You may be able to get it with an offshore broker, but it's going to be quite difficult. So it's really just going to brokers where you can potentially locate shorts and looking to short it. I think TradeZero is normally quite a good one to locate shorts on smaller accounts. But overall, it'd be something, personally, how I would trade it is if you can't get it short, I wouldn't look to trade it. But again, even on something like this, you are risking a lot, just because, again, there is no option to hedge and define your risk. So you do have to run stops if you are shorting this. And the way I would look to do it is run tight stops above the deviation. So again, if you're shorting from that $19 level, maybe risk $1 on the trade. And if that doesn't work out right away, you look for that re-entry at that 25.80. And again, you still run stops on it, because you're going to have to if there's no options. But really, overall, I mean, we cover this stock just because people are looking at it. But overall, there's definitely cleaner stocks to trade. And so I would really stay away from something like this, because I just think it's going to be quite difficult to trade. Again, I wouldn't trade something like this long bias. So if long bias is more your thing, then again, there's definitely more trading opportunities on it for that. For me, I would prefer to short something like this, but again, just getting the short setups with risk management is going to be hard on a stock like this, and risk management is going to be our number one thing as a trader, and this stock's going to be difficult to manage it. So again, I would be careful when looking to do that. The only other thing as well you could be looking at for these shorts is this since IPO VWAP does seem to play out quite nice. So provided a scalp short opportunity here. On the next move, not as clean, but did provide a bit of a breakdown below there. And again, same sort of thing. Actually, on this one, it didn't really provide that clean of a move. But what I am seeing with this, since IPO anchored VWAP, is when we start to break below it, that's when the short is kind of confirmed. So that's maybe a potential way you could be looking to short this. For example, you're struggling here, you're consolidating here, you break above, you come back, you get your close below, your risk could then be that candle high, and you look to short that downside move. Again, how did that play out on this one? Again, no close below, you get your close below here, you short. Again, here you would have to definitely risk a bit more, so that's probably not going to be something you want to trade because the risk on it just does not make sense. But overall did provide the same trade plan. And again, here, waiting for the close below, you get your close below here. Again, potentially stop at highs. Again, that's still quite wide, so you could definitely have it a bit tighter, maybe like that candle high. And again, just provided nice entries for that short bias move. But again, overall, something like this, personally not something I'm going to trade on either direction because I just think it's going to be quite difficult to trade. But again, does definitely have tendencies to pop, so you can look for the longs on that. And when we do get these massive extended moves, don't think it's going to hold the move and just continue to run. It is going to drop, so short that move or take your profits depending on how you're trading it. Anyway, hope you enjoyed the video. Hope to see you next one, and that's it. Peace.